Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the H1 FY26 post-earnings conference call of SKP Bearing Industries Ltd. Today on the call from the management team, we have with us Mr. Srinand Palshikar, Chairman and Managing Director, Ms. Sangeeta Palshikar, part of the promoter group, and Ms. Shripada Patil, part of the finance team. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risks and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to run us through the investor presentation key slides, highlighting the business and performance highlights for the period ended September 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Okay. A very good morning to everyone present here. Thank you for joining us for the earnings call of Q2 and half-year presentation. I would like to go through our financial highlights. Next slide, please. Some of the key highlights of Q2, as we can see, the numbers are improving from Q1 to Q2. Q2, we have revenue from operations as 150 million. EBITDA margin has increased to 40.9 and earnings is 61 INR million. Also, profit before tax and profit after tax margins are as shown in the slides. Even for the consolidated, we are seeing a similar trend, which is on the improving side compared to Q1 to Q2. In front of you are the income statement for Q2 and H1 standalone. As we can see, overall there is an improvement in the revenue of operations. Q1 was 13.6, now it is 150. For profit before tax was 41, now it's 69. And similar PAT is compared to last quarter, which was 25.5. This time it is 45.5. In a half yearly, if we compare, similar for the consolidated, similar trend. Next slide, please. Our capacity utilization, as we know that ball plants has commenced, so the capacities are as shown in the slide. Our geographical breakup for domestic and export sales as compared to last year and this year. Some of the key highlights in the past quarter, we are, as mentioned earlier as well in the calls, France business integration and turnaround is ongoing. We are ramping up with production and customers. Also for plant 3 has now started. So there again, the utilization has started. Also, some debottlenecking operations which were there, that capacities have been increased. And on the front side, we are improving the margin and sustainability. And PM Kusum scheme has now started generating a substantial portion of the revenue. Next, please. A brief on the about us for the new investors here. So we are manufacturers of rolling elements, primarily needle, cylindrical, steel ball, and special chemistry balls. Next, please. A small journey. We started in the year 1991, which we started with needles. Then we expanded into cylindricals, steel balls, and renewable energy sector. And in 2024, we acquired a French company, Valet Guaran Industry, which expanded our portfolio to overseas as well. Next, please. Our board of directors remains the same. Next. Our manufacturing facility. As you can see, this is the latest photo of plant 3. Yes, next please. Our product range for those new over here, needle rollers are parts which go into needle bearing, single row, double row, and cage needle complements as well. Next, please. Cylindrical rollers are rollers which are going into cylindrical roller bearings. Next. Precision pins. Precision pins is a wide variety. They go into not just automotive but other applications as well, gearboxes, industrial machineries, and many more. Next, please. Balls. We are making balls from 4 mm to 22.25. Uh, Balls again find their application in variety of industries. So besides the automotive, we go into accelerator, water pump, steering, brakes, as well as the French portfolio, which considers of satellites, glass balls, plastic coated. These find their applications in pharmaceutical as well as cosmetic and many other industries. Next, please. Our French plant and its range. Our strategy. So basically, we are yes. Okay. Please go ahead. Next slide, please. Yeah. So these are some of our key strengths, which we have told time and again in the calls, but we are just repeating once again over here. So we are one of the only manufacturers with such a wide range of products under one manufacturing roof. Also, we are having manufacturing facilities in two continents, in two different countries, which we pitch ourselves as a stable global supplier for a global customer. Next, please. Some of the industry overview. Next, please. Our green energy segment, windmills and solars. Way forward. So the way forward from now, Jamar plant has already commenced its operation in March. So now we are expecting to increase the utilization in the coming quarters. Also, the France subsidiary has completed its 1 year of operations, and now we are seeing improvement in margin and revenue. Capacity expansion at existing roller plant is being started because the ball plant has shifted. So now we have space for capacity expansion. Also, global exports. So that France and Indian synergy, we are leveraging that in the coming years. Next, please. Next, please. Some of our certifications. Thank you. With this, I would like to transfer the dais to Mr. Parshikar, our MD, to give his insights. Over to you, sir.
Good morning, everyone. Thank you for joining early time of the morning, because it's very tough to join so early in the morning because people are busy traveling and it's a lot of pressure. It's, end of the week, last day of working for many of people. So thank you for joining. I would like to give certain futuristic approach, and you must have seen the figures are now improving. Our strategy of acquiring French plant, integrating both the facilities, providing solutions to the customers, which is having multiple site. So a global supplier to global customers now is bringing fruits. Or over a period of time, we have even more good potentials and volumes for the exports, new customers will be, we are very confident that they will be coming to our portfolio. Also, our French operations are now slowly taking a shape, is getting better and better. Of course, we are facing global challenges. It's not that easy. A lot of challenges has been in past 6 months or so, where it's all global challenges. So we are facing these all global challenges with a very positive side. All customers where we have approached, where we have proposed the solutions, slowly they are bringing, they are coming back and putting faith in SKP. They have seen we have delivered in last 1.5 year, almost 1.5 year, and we see a very positive side of SKP. Again, we are doing expansion now in the roller segment. We have very good growth potential, and we are doubling all capacities, and this all process is on currently. Ball facilities are now already fully operational. All customer approvals and sample submissions, this process is on. It's a complex process. Of course, it takes time because it's a pure engineering solutions, and customer need to do a validation, do audit, testing like that. So this process is on. So we are very confident that over a period of time, the ball utilization also will be at very good level, and roller utilization will be at also very good level in time to come. So this is our future plan. I think now we can.
Thank you. Thank you, sir. We'll now open the floor for question and answers. Anybody who wishes to ask a question, please use the option of raise hand. If you are unable to use the option of raise hand, you can put your question in the chat also.
Hello.
Hello. Yes, Mr. Rajesh. Or is it Mr. Varun?
Yeah, Varun. Good morning. Good morning, sir. Thank you for this call, and must say an encouraging set of numbers. So I have two questions. One is on the French entity, and the second question is from the guidance aspect. So the first question on French entity, sir, is from the numbers point of view, that if we subtract the standalone numbers from the consolidated numbers, I presume this would be the revenue coming in from the French entity. So the current quarter looks like we have 2 crores of top line from the French entity vis-a-vis 8 crores in the previous quarter. So, sir, would like to have your views as to the reason for this fluctuation. That is one. So, second question on the guidance would be, previously we mentioned an aspiration of 100 CR top line in the current year. With the first half, we are, sir, at roughly 40 CR. So, are we still on the course to meet that aspiration? And so, a bit more from a longer term perspective, would it be, what does the company have an aspirational revenue projections, targets for 5 years down the line? Or right now it is too early to ask about that question? These two things, sir. Thank you.
Thank you. Good questions, because these are the questions which will be there in almost 80% of investors. Because so I will answer point by point. First, your question was a fluctuation of revenue in between comparison between Q1 and Q2 of French entity.
Yes,
so
sir.
the question is, if you do a subtraction, you will have the revenue of around 2 crore or something like that from French entity. That's correct. There are two reasons. One reason is fluctuations in customer orders, French customers orders, because of various global situations. This is one major reason, because some of our customers are also facing the same problem of tariff, which are European customers are supplying to US, and they are facing huge fluctuations. The customers were not very confident. So this was a situation in Q2 everywhere. This was one of the main reasons. So we have a customer demands fluctuating between quarter to quarter, number one. Number two, we have a holiday, a big holiday. If everybody is aware that Europe, you would have a holiday in month of July, August. So we were something like 4 weeks of holidays, something like that. So we have a drop in demand, number one. And number two, we have a holidays. So actual operatings are very less in this particular period. So these two are the reasons which are basic contributing towards drop in the revenue from quarter to quarter basis, because you are doing a quarter to quarter comparison. Okay.
Yes.
This was one question, which is second. Second, your question is about the targets, the yearly targets. Again, this is also a very, very important milestone. Our target was something which we have already explained in our previous earnings calls also, that we are targeting for migrating to the main board. This was our target. Yes. To be very practical, looking at the number, we have a big now target. If we have to achieve that particular target of 100 CR for this particular financial year, we have balanced 6 months. So we need to achieve a very big target. This target is not easy. Already our team is working how to achieve this particular target. The target remains the same, but the practical approach will be, if you do 40 in first 6 months, we will do a much better in second half. That's what I can say. Because now we have all holiday season over in India, in France. We will have some little holiday in France end of the year, but that is a very short period usually. And we have a very good visibility of orders for future for France, also for India, a very good visibility. So we have a good booking. There's no problem for anything for that. So our team focus is to supply in time, produce and supply in time, and meet customers' requirement. This is what is our focus. The results should be very promising. That's what we are targeting. I hope I answered all your 3 questions.
Yes. Thank you, sir. Thank you so much, and wishing you all the best, sir.
Thank you.
Thank you, Varun. Anybody who wishes to ask a question, please use the option of raise hand.
Hi, I'm sorry, Mr. Palshikar.
Yes,
This is
Jaydeep.
Jaydeep Merchant here.
Yes, good morning, Jaydeep.
Good morning, sir. My question was related to the QC order, which has got delayed now, the implementation of which. Can you let us know the long-term impact of this order implementation and how the larger bearing companies are preparing for this and the impact on our business?
First thing, at SKP, we do not feel any impacted because of the competition. That's number one. What we believe in deliverance to customers. The customer has to come back. He has to give us a target, which we have to meet. So we are not afraid of competition, number one. What is most important is the productivity level, quality levels. These are the requirements. Customers know the quality control order has been delayed because there has been a lot of resistance from major clients, importers, everybody to bearing in its commodity. Bearing quality control order has been more or less cleared, but a component quality control order still being not clear. There is another new hurdles which is now coming. So, okay, the ministries are working, the associations are working, both the sides. So we are not afraid of the competition. That's number one. Even if it is a Chinese competition, we are not afraid. We have to see that we have to deliver a quality product at value for money at customers' requirement. This is our focus. So we are not afraid of competition. We give solutions to our customers which are long-term and sustainable. So this is our focus. There is a process of implementation. So even with the OEMs where we have approached for roller, there is no problem. For ball, we have a huge gap to meet. So there we are working very hard. So meet all the requirements of customers in shortest possible period of time, so that we have all approvals from major customers and the utilizations will reach to the required levels very soon. So this is our focus. But quality control order, when it is implemented, it will be a boon for all Indian manufacturers, because the size of the industry for bearing and components is, as on date, is more than 10,000 crores. So this particular volume, even if it is shifted 50% to Indian manufacturers, Indian manufacturers are immensely going to be benefited. And it is going to be good for all major customers, major manufacturers, mid-sized manufacturers, and small-sized manufacturers.
Thank you, sir.
Thank you, Jaydeep. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the next question from Shubham Upadhyay. Please go ahead.
Yeah, hi. Good morning, everyone. Thank you for the opportunity. So I wanted to know what is exactly the utilization level for H1 FY26 for roller plant and ball plant, because I don't see it in the presentation.
Only one question, Subha?
Yeah, then I have a follow-up question. So, like you have been talking about the challenges, the world challenges, especially regarding your French plant also face some challenges due to geopolitical situation. But I think there is a already established free trade agreement between US and EU. So do we see those challenges persisting, or do we see it subsiding over the next few quarters?
Okay. So your first question was related to, can you just repeat the first question?
Utilization levels for H1
Okay, yeah, okay.
FY26.
Okay. For the roller plant, already we are at a very good level, close to 90 level, 90 plus level. Ball utilization, we are at a very low level because our capacities earlier was low. We have now expanded to 200 tons per month. The order cycle, it is increasing. The trend is increasing, of course, but the trend compared with the previous capacity and the current capacity, it is not in line. So we are focusing on very high volumes, the time to come, because we have established the capacity something like 200 tons per month. Currently, we may be operating around 40, 50 tons per month. So this is what is currently operating level. And we have to reach 200 tons per month. This is the gap. So we have a huge opportunity for ball plant. Roller, we are already at highest levels. We are expanding our capacities to twice. So this is what is our focus, whatever we are doing currently around 100 tons. So we are expanding to 200 tons. In principally, if you take for both the plants together, we will be from 125 to 130 tons 2 years back to 400 tons in next 1 year to 2 year period. Regarding French entity, geopolitical situation, yes, everybody was very afraid. All our customers, end customers, not our direct customers, but the end customers also had this particular volume forecast decreased. So they were also playing very cautious. But now we have a very clear vision for the balance of 25, the volumes, and 26. So we have very good visibility for 26 now on our customers, which we are focusing now slowly are coming back.
Okay, that helps. And sir, final question regarding your phase 2, which you have mentioned in for the ball plant, like up to 4,800 ton per annum. Like, when is this? What is the timeline for this? If you can.
The process is customer approvals. Customer approvals is the process. So we are in that particular phase. The plant is fully operational. Now it's a question of customer audits, the customer visits, the samples, approval. This is all. And the customer also will not give 100% volume on day one. They will also do a testing. Okay, you have some particular SOB levels, but we are targeting larger level of customers. So this is a process is on. Process is on.
Okay. Thank you so much, and all the best for the future.
Thank you, Shubham. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the next question from Anubhav Jain. Please go ahead.
Yeah, hello, sir. So my question is that we have seen initial green shoots of improvement in your consolidated as well as standalone. So how do you see this playing out for the remaining part of the year?
I'm very positive, very, very positive.
Yeah, I have some follow-up questions also.
Yes.
Yeah. So where are we on the overall reduction in employee cost in the international subsidiary, and how will the margin profile change?
See, its margin profile is again is a resultant of your cost, sales, and a cost. There are certain sales part which when we are talking to the customers, we have to meet their expectations. Now, what is left with us is the cost part. So we have to be very cost effective and give the solution. So the resultant remain the same. So people who are with us since a very long period and those who have seen us, this question was there since last more than 2.5 years when we got listed. So everybody had asked always the questions, your margins are, which is unimaginable type. Do you have the long-term sustenance for this type of margins? Now it's third year we are now into. The margins people have studied, who have analyzed, you must have seen the margins are quite sustained. Yes, there will be for a few percentage point fluctuations for here or there, but yes, over a period of time we have performed.
Yes, sir. My last question is that are we working on the strategy to reduce the cost by offshoring to India?
See, we are already at the highest level of the costing structures. Of course, there are other measures also which are available. Then it is when the right time comes, we implement those particular measures. So you have to have the stability of some particular model, and then when the stability achieved, for then we do our implementation. So we have a very proper planned activities for all these models to implement. So we do a cost optimization.
Okay, thanks for the opportunity, sir.
Thank you, Anubhav. We'll take the next question from Ashish Kumar. Please go ahead.
Yes, sir. So my question is that in Q1 con call, you had indicated that the margin is sustainable at 40% in standalone business, which we have seen in Q2. Consolidated EBITDA margin is at 25.4%. So where do you see consolidated EBITDA margins with gradual improvement in international subsidiary?
See, international subsidy, our focus is the revenue. It's a top line. So yes, the cost structure over there is more or less it's fixed. Number one. Number two, the cost structure will reduce because of retirement or because of optimization of the resources which are available. So now our focus for the French entity is very simple, top line. That's it. You achieve hit the new line, new targets, new customers, and we're constantly focused on this particular line. We are contacting all our old customers. Those who are new, I would like to update you. This particular entity in 2010 was operating around 16 million euros. This was operating. Over a period of time, this got reduced to a level of around 8 million before we took over. When we took over, customer approvals, many complex procedures has taken us hit. We went down. Now we are coming up. Our target is to reach to the all old levels in period to come. This is our target. We have to win back the customers with all the solutions. We are very flexible. We are dedicated. We have all new technologies to be implemented and to offer to our customers. And customers have liked it. I will not say that the customers have liked it. They have put faith in us. They are coming back with the higher volumes, even higher volumes. The old customers are coming back with the higher volumes for 26. We have much better visibility for 26.
That's good to hear, sir. So my other question is that with the new expansion in rolling bearings, how do you see this utilization level changing?
Sorry, repeat.
With the new capacity expansion in roller bearings, so how do you
Rollers.
see this utilization level changing?
We have a good visibility. That is why we are expanding. So it's not like we have a customer order and then we do expansions. So first we do the expansions and then we offer our capacities to our existing customers, new customers, and these are pure engineering products. So these have got a lot of quality requirements. This has got a very warranty requirements also, performance requirements also. but these are engineered and manufactured products. So the process is on, it's never a traded product. So it's not like X plus X equal to 2X. It's not like that. So it's always a slow and steady growth. The customers win backs, we never loses. This is a very simple theory. The customer who comes back will always have a increased faith and increased turnover on size of the business. So it's long term, it's not short term.
Okay, so for all you said, so if you can tell me what is your revenue guidance target in standalone and on consolidated basis for this year and also for over like next 3 years?
See, I always believe in working, means producing results by means of customer confidence and revenues. The figures will automatically get generated, because when you have a customer confidence, you have the business, automatically the top line and the bottom line will increase. I cannot give any figures because I always say it's not okay to give disclose figures, anything, but our future levels are very bright and very optimistic.
Okay, sure, sir. That's it from my side. Thank you so much for.
Thank you, Ashish. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the next question from Majid Ahmed. Please go ahead.
Am I audible, sir?
Yes.
Yes, Majid.
Yes, sir. Thank you for the opportunity, sir. Good set of numbers. Sir, I just want to understand, especially from the working capital and cash flow point of view. I'm seeing that in terms of even though you're able to improve your margins to 25% EBITDA, but I'm seeing your working capital is quite stretched, leading to higher working capital debt. How are we going to manage sustaining your margins and improving your working capital together? Like,
Working capital means, what do you mean by the amount, or what do you mean by?
the working capital days, the working capital
See,
overall days I'm talking about.
we those who know us, see, we do our lot of product. We have our own processing. We have our own product we develop. So because of that, our inventory levels are higher, and because of those, our margins are very sustainable. So we do a lot of product engineering by ourselves. So because of that, our inventory levels are on a higher side. We develop products, we provide solutions to the customers, which are other manufacturer, other competitors do a import solution like that. We develop ourselves and we provide equivalent solutions. So there are two different strategies which are present. One, import work. We believe in develop and offer. So this is why we have a better margins. That is why we have a better operational excellence, but we have a little higher inventory levels. Of course, my team works always on optimization of inventory levels, but then yes, this is more or less with little on higher side.
So going forward, this will maintain in the coming years.
It will be, there will be some fluctuation, but it will be more or less same.
Got it, sir. So like apart from that, so to sustain margins, what type of like any raw materials or anything which affects your gross margins? Or because I see your gross margins on a H1 to H2 basis. So last H1 FY25 is around 78% of gross margin, and this time if I see it's around 66%. So this quarter you have made 25%, but on a H1 FY26 it is slightly moderated due to some operation efficiency. Or EBITDA was improved. Just want to understand that part. Yeah.
So there is some fluctuations on, because you cannot have very one-to-one relationship this. But if you take overall bottom line or overall top line, overall, so you will see a very, very moderate level. There will be some fluctuations, but it will be always in the same range.
Got it. Sir, finally, sir, as in your French subsidiary, what type of revenue are you looking in the coming years? What type of growth? What are you looking at?
I just now was saying the same.
Yes.
This entity was one point of time was 16 million. As the owner of that particular entity, SKP should target the same level. So this is a very, very optimistic, a very strong. Why not? So this is what is a long-term strategy. So all customers to come back, new capacities to be added. Let us hope we reach to those levels at one point of time.
Thank you, sir, and all the very best, sir. Thank you so much.
Thank you, Majid. Sir, we'll take the question from chat. It's from Mr. Rajesh Jain. He's asking, in the consolidated results, stock in trade has gone up and employee costs have come down for the quarter. What is the reason for it?
On consolidated basis?
Yes, sir.
Stock in trade is the inventory is the same thing which is happening. There will be some fluctuations. There will be some positive side, some negative side, means fluctuations, both sides.
Okay.
For the employees, yes, as everybody is aware, okay, I would like to again brief, because our revenue, not top line, not so higher, we had gone for certain economic dismissal as per the French law. So this particular economic dismissal has resulted into a lower employee cost. So we are already at the best levels of employee which is required over there to operation. So that is why there will the structures and the overall performance has increased.
Thank you, sir. We'll take the next question from Mr. Pankaj Shah. Please go ahead.
Yeah. Good morning, sir. Great set of numbers. Sir, I just wanted to know regarding our new ball plant. I believe we already have identified few big customers, right? And we are in the process of submitting our samples and get the audits done for our plant. So, I mean, where are we exactly into that process? I mean, are we expecting any material, I mean, any substantial order maybe in this quarter or the next quarter, or will it take next financial year?
A very difficult question to answer. Okay, when?
Okay.
When is a very question. See, our approach should to do as fast as possible. We have all the set of customers identified, the volumes identified, commercials, sample submissions already done to some customers. For some, it's all process is on. Okay, our target is to achieve to the utilization level as fast as possible because the capacities are already available. When we have the capacity available, customer satisfied with his quality requirements, because it's a pure engineering product, high quality performance requirement. So once he is satisfied, he releases order to certain SOB levels, receives those. So this process is on. It's not like it is. So it is different for different customers. So larger customers, we have one customer which is something like 50% of our total manufacturing capacity. So it's like, he takes more time because he is doing evaluation. He will do everything because his also dependency on us will become a large. So it is his requirement. So they need to do their own due diligence for testing, approval, everything, all parameters. So this process is on.
Okay, but sir, I mean, sir, just wanted to understand these big customers currently must be buying from some other supplier, right? So, okay, so they are majorly importing it right now. Okay, and we are replacing import items. Oh, great, great. Okay, and sir, I have one more question regarding our roller expansion. So, when will it complete? I mean, when the new machines would start, would commission?
We were targeting for year end, but there is some delay in some machineries which are coming. So let us hope in first quarter we should be in a position to have these particular increased capacities. Because we are working on different level with different suppliers.
Okay.
Where we have a highest bottleneck, we had started where the lead time is 8 months to 9 months. We had started 8 months, 9 months back. So there we have a delay. It's like that different stages, different suppliers. So we are working with all those.
Okay. And sir, for these new machineries, will it also require to pass through these process of, I mean, sample submission and again
No.
audit by?
No.
Okay. Okay. Oh, great. Great. Okay. That were my questions, sir. Thanks a lot for your time.
Thank you. We'll take the next question from Rudraksh Raheja. Please go ahead.
Yeah, thank you for the opportunity, sir. So, do we share numbers on how much roller and ball division is contributing to revenues?
Percentage? You mean to percentage?
Yes, sir.
If you take value wise, I think the current ratio, I think Shripada would be a better person to answer this question. Shripada, if you can answer this question.
Yes, so we have put in the segment reporting. In that, if you can see Mulchand plant and Jomar plant. So considering our ball plant has commenced operation in March.
Mohsin, can you share the screen?
Yes.
Yes,
So
please.
ball plant itself, the Jomar plant is the ball revenue. So if you consider standalone, so it's comprising around 7.5 to 8% of the revenue. And it's uploaded as well. Segment reporting.
Got it, sir. I'll take it from there.
Okay, sir.
Sir, what would be the peak capacity utilization we can go in our plants?
So you can see these are the numbers.
Got it, sir. Thank you so much.
Okay. So you will see a lot of changes taking place in this particular reporting also because over a period of time, because this particular shifting, some process on. So all these changes are going to, this is for 6 months, correct, Shripada?
Yes, sir.
This is for 6 months. Okay. Yes, Rudraksh, any other question?
Sir, what would be the peak capacity utilization we can go in our plants?
That's what we have described. For 200 tons is a target for ball, and 200 tons is for the roller when it is fully expanded. Currently, we are operating around 90 to 100 tons for the roller. Currently, our operational level. For ball, we are operating around 35-40 tons. We are operating. The value for the ball is lower compared to the roller. So because of that, you will see there is a difference between these two products.
Got it. Sir, what I meant was that whatever the nameplate capacity is, can we utilize 100% of that?
See what happens in engineering industry when we describe the capacities usually on a bottleneck machines, bottleneck assets. Whichever is the bottleneck, the capacity is defined on those. Usually for all manufacturing plants, where you have the costliest machine or costliest assets or critical processes, those are the bottleneck, and that governs the capacities. Same is the case with us. So the capacities which we define is based on certain bottleneck, and this governs the capacity. Our target is for the utilization. Once we reach to the highest level for this particular bottleneck operations, we do a debottlenecking. This is usually the system, engineering system. So this is what we are working. So utilization, we have already explained to you. We have a good visibility for future orders. There is no problem for the orders where we have very clear visibility. Our target is to reach to those levels as early as possible.
Got it, sir. Sir, when we say we have good visibility on future orders, do we share some numbers on our order book?
Usually we believe in proving ourselves rather than giving the numbers, withdrawing numbers. We believe in proving ourselves. So giving numbers, prove yourself, show to the investors that we have proven. That's what we believe.
Got it. And okay, no numbers on whatever the order book is, but in general, uh, what time do we take to convert that order book into revenues?
I can tell only one thing. We have very good visibility. Not good visibility is very good visibility. Very good visibility. When I say very good visibility, you hear me?
Yeah, sir, please.
When we say very good visibility, there is an advanced stage of product and validations.
Got it, sir. Got it. Thank you so much, sir.
Thank you, Rudraksh. Anybody who wishes to ask a question, please use the option of raise hand. Sir, since there are no further questions, would you like to give any closing comments?
Yes, thank you all the investors who have joined today. In the morning time, I think a lot of results and a lot of hectic schedule for everyone. But I can assure you only one thing to my investors. Our future strategy is very clear. Our focus is very clear. Our visibility also is very clear, and our drive also is very clear. We are down to earth. We give solutions, good solutions to our customers, and all our customers are liking that. We are flexible, we are dedicated, and we are positive attitude. So every customers, even the big names, which I am also not allowed to say in public places also, such big customers are coming back to us, even though the volumes may not be very big, but this is some sort of a confidence which our customers are now placing back to us, and we have very good and very bright future. I can say only one thing.
Thank you to the management and thank you to all the participants for joining on this call. This brings us to the end of today's conference call. Thank you.
Thank you.